Turning now to focus in on three members of the Mag 7, Amazon, Meta, and Alphabet. With a combined market value of more than $5 trillion, these three tech juggernauts dominate across e-commerce, social media, and search. To discuss, we want to bring in Mark Mahaney, Evercore ISI's Senior Managing Director, Head of Internet Research. Mark, it's great to have you on, and you're the perfect person to talk about these three names. So let's kick off this coverage with Alphabet. A lot of eyes are going to be focused on what exactly we are hearing from Google's parent company. Of course, it's everything from Google Cloud all the way to the advertising revenue. I'm curious, what is the number one or maybe the top factors that you will be looking for in this results?
I think it starts with search and it probably ends with search. So can they maintain search revenue growth, kind of double digit, solid 12, 13, 14% search revenue growth year over year? Does the outlook continue for that? Second is YouTube. If there was one weakness in the June quarter, and like generals, investors always battle the last quarter. The softness last quarter had to do with YouTube, which came in a little light. So does that turn around or not? And if it doesn't, why hasn't it turned around? It's not like it's declining, but the growth did come in light. And so that would be the secondary issue. And then third, there is a broad expectation in the market that the cloud companies will be able to print accelerating revenue growth in the back half of this year because industry cloud demand is accelerating. So Google Cloud should show that. By the way, so should Microsoft Azure, and so should AWS.
I wonder what you think, Mark, about the AI goodness. It feels like Google has not had the first mover advantage on that. What do you expect to hear from Alphabet's earnings specifically on AI?
Well, they've been talking about how they're trying to infuse AI into all their products and services. I mean, I think you're seeing it in AI overviews or in Google Gemini. And then I think you're seeing it also from a marketer perspective. So not too many consumers see this, but in terms of the way that they're able to help marketers and advertisers better target, better manage ad campaigns, better drive attribution, and all of that should lead to a higher return on ad spend, which should lead to continued kind of robust ad revenue growth across the board. So I actually think Google's done a decent job with AI. They've been investing in it for, 7, 8 years or something like that. I think they got caught a little bit flat-footed by OpenAI, but my guess is that they have the ability to easily catch up to where OpenAI is.
Mark, let's zero in on Meta. Meta has certainly been an outperformer among the Mag 7 companies since the start of the year. We're looking at gains of over 60% since January 1st. Of course, a lot of the focus is going to be on CapEx spending plans. What exactly we are going to be hearing from Zuckerberg on the call or some of the other Meta executives. Is this the type of momentum that you see continuing here after third quarter earnings results, or is this a risk here of almost a catalyst to the downside?
It's probably more the latter than the first. There's this mean reversion trade that, I think it's a probability with this name. Look, I think fundamentals are well intact with Meta. Is it actually the best performing of the Mag 7? I guess it probably is. I don't know. Probably not with NVIDIA, but I don't cover some of the other names. But in the internet space, the fundamentals have been amongst the most and probably the most impressive in the advertising space. I mean, especially at their scale, they're doing well over 20% revenue growth. That is truly impressive. I think there's a lot of kind of untapped areas, threads, click to message ads, WhatsApp, Facebook Marketplace that they can still kind of lean into to sustain what I would call premium growth, mid-teens, maybe even high teens over the next couple of years. Margins are rising. So the expectations are high for this stock. I think they'll be able to deliver against them. I like the stock. It's not one of my top picks because it's not that dislocated right now. It's not dislocated at all. It's probably the most consensus long in large cap internet. But maybe the one trick or one thing, if the stock were to trade off, it would probably be because the company were to surprise people with a really aggressive CapEx outlook for next year. I think that's a possibility. I don't think that's the probability, but I think it's a possibility that happens.
Well, and given that Meta has found a lot of success by being really defensive on the balance sheet, I wonder, too, what you think we're going to learn about their expenditures when it does come to AI. Do you think that we will get any indication about any ROI on their AI spend this cycle, or will we have to wait?
I think we'll get it. I think we've gotten it. The last 2 years, if you look at the ability of this company to recover to almost 30% ad revenue growth, that came because of AI. They used AI to rebuild the user interface to make it more of a media platform rather than a social platform, and they used it to dramatically improve the ad targeting, campaign management, ad creative for marketers, and that's why Meta right now is perceived to be kind of the easy buy amongst marketers, amongst advertisers. I think they'll be able to give you more and more data points that prove that they've been able to effectively, with a good ROAI, that they've been able to effectively invest in AI, which is one of the reasons why I think they've been so successful with it, that I think they may well decide to even more aggressively lean in. I don't think any of these major internet tech companies, the big ones, Amazon, Google, and Facebook, Meta, I don't think any of them are going to step back and say, hey, we're cutting back our AI capex. They're either going to keep it where it is or they're going to accelerate it even more. And that could be a little bit of an issue for investors.
Mark, zeroing in on Amazon, I know it's your top pick within your coverage list right now. You've got a 240 price target on the stock. Explain to us or break down that bullish call and why you're so confident in Amazon at this juncture.
I think Amazon can go higher if AWS growth continues to accelerate, high margin business, large TAM, market leading position. If they can kind of prove that 2 years ago, the narrative was they were losing share to Microsoft. If that narrative changes, and it would change if they continue to show accelerating revenue growth, I think that helps takes the stock higher. If retail sales growth for Amazon, kind of around 10%, kind of stays consistent, there's no real sign of consumer softness at Amazon, and if retail margins continue to rise, the trick here is they're investing a lot in this new satellite communications initiative called Kuiper, which is kind of a competitor to Starlink. So investors are going to want to know what's happening to the core retail margin trends ex Kuiper. If they can show those to be steadily, consistently, solidly rising, I think if you put those 2 or 3 elements together, the stock goes higher. That's why it's one of our top picks. It's why it's our top pick.
Yeah. Mark, let me get 30 seconds from you on AWS, making up about 17% of the business, I believe. What do you expect to hear from them about growth moving forward?
Acceleration. So they did 19% year-over-year revenue growth last quarter. That number's probably 21% this quarter. And it's because we're behind the optimization cycle, because AI workloads are leading to more requirements or more business for storage and compute, and because corporations as a whole are re-engaging with cloud computing. We should see acceleration from AWS. By the way, if you don't, I think that'd be a real negative catalyst for the stock.
All right, Mark, we got to leave it there. Thank you so much for joining us. Appreciate it.
Thank you.